Understanding the RMD and the QCD in this week's Fastest 4 Minutes in Finance. Hello and thanks for joining us again. I'm Scott Inman, and let me first say that I hope you had a Merry Christmas. And with Christmas in the past, that means there are only a few days left in 2024. It sounds crazy to me that 2025 is almost here. The end of the year always sneaks up on me. And if it sneaks up on you, we've got an investment reminder and a tax savings idea in this week's segment. Let's start with the RMD. That stands for Required Minimum Distribution. It's a designated amount that is required by the IRS to withdraw from your retirement accounts beginning at a certain age. Now, that age has changed over recent years, so to keep it simple, the current RMD age is 73 if you reached age 72 after December 31st of 2022. If you were already 72 before that date, you should already be taking RMDs. If you turn 73 this year, you are required to withdraw a specific amount based on your account value at the end of 2023. And you have until April 1st of next year to take your first RMD. Every year after that, it must be taken by the end of the calendar year. Now, the RMD rules apply to all employer-sponsored plans and traditional IRAs. It does not apply to Roth IRAs. The amount is calculated based on a life expectancy table that the IRS publishes. The RMD must be calculated for each retirement account you own, but the cumulative amount can be withdrawn from a single account to satisfy the RMD. Sound complicated? Well, it kind of is. And if you get it wrong, it can be costly. If you don't withdraw enough to satisfy the RMD, the amount not withdrawn is subject to a 25% penalty. And that's on top of the taxes you owe on the withdrawal. So it's a good idea to work with a financial advisor to make sure you're getting that right. I mentioned the tax on the RMD. The withdrawal is taxed at ordinary income tax rates, and it will be stacked on top of the other income you receive in 2024, so it could push you into a higher tax bracket. That brings us to the QCD. This stands for Qualified Charitable Distributions. It's a charitable donation made from your IRA, and there are two big benefits. First, the distribution is tax-free if it's made directly to the charity. Second, the distribution counts toward your required minimum distribution. So if you're charitable-minded, you can send your distributions to your favorite charity. They're not taxed, and potentially you don't have to receive a taxable distribution after you reach age 73. And you're actually eligible to make a QCD at age 70 and a half. That used to be the RMD age, and the limits are high. For 2024, you can make up to $105,000 in qualified charitable distributions. The limit goes up to $108,000 next year. It's important to note that QCDs are only available from an IRA, not an employer-sponsored plan. That's another reason to work with a financial advisor. As we close out the year, I want to say thanks to everyone who listens and watches the Fastest 4 Minutes in Finance, and we look forward to bringing you more in 2025. Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.